Hello everyone. All of us have heard it is important not to put all our eggs in the same basket. And this applies to financial markets too. Risk diversification, of course, but also creditor, source of financing, diversification is key. Egypt provides a quite good example of what this means. The country went through many financial changes in the recent years. It implemented an IMF program of financial reforms and became the darling of emerging markets investors. In February this year, the foreign holdings of local debt was reaching $30 billion. In May, after some months of risk aversion, the holdings fell to $9 billion. But May is also the time when confidence was restored thanks to developed market central banks and additional IMF loans to Egypt. That led the country to be the first emerging state to come back on the primary international market. And it was a tremendous success. The signal was very positive and foreign investors returned to the local debt market. At the end of November, holdings of foreign investors were at $24 billion. So that's a relief, and it's also demonstrating that diversifying the investor base is crucial. And Egypt knows that and has been working hard, and it's still working on that. So since 2018, the country is working to be able to deliver its local debt on the European Euroclear platform, which will open the door to more foreign investors. Major steps have been achieved. The goal could be reached by the autumn of 2021. Egypt is also working on issuing its first Islamic bond, Sukuk bond, both on local and foreign market. The country could also enter the floating rate note market, and it is also working with JP Morgan to be included in their emerging market indices, which would then also open the door to passive investors that provide a more stable base. And there's more, because late September this year, Egypt has been the first Middle Eastern country to issue a green bond. A big success here as well, with order book reaching $3.7 billion for a $500 million issue. And this is a major step because it allows Egypt to further diversify its creditors with pension funds, insurer, or funds that are following ESG guidelines. And that's the type of investor that have a long-term approach and that are less versatile. So Egypt is everywhere in each segment of the debt market. And it is also promoting transition towards a greener economy. This spotlight on responsible investment is currently limited to the E of ESG, being the environment. And yield-hunting investors could forget that ESG also implies a social and a governance dimension. But some investors remember. So probably the ultimate diversification of Egypt's financing base will mean attention to more basic civic rights and better state governance. Thank you.